Norval Loftus joins me in the studio. Thanks so much for coming in today.
Thank you.
What do investors do in these volatile times? How do you position yourself?
Well, I think you have to be very cautious and very focused and nimble so that you can manage your risk very quickly. I mean, clearly, we've had a long run up to this sort of environment, so this really shouldn't be catching anyone by surprise. You just have to really be very, very careful.
Now, we've got some very high yields, obviously, in some EU bonds, but are they just too risky? You talked about caution there.
Well, the European high yield market is a very important market for us, something that we've spent a lot more time looking at recently. It's performance-wise had a very, very difficult quarter. There have been outflows in terms of the money flows into the various funds, and a lot of the issues have had substantial price falls. But some of the more recent transactions, the recent deals that we've seen during the course of, say, September, have performed extraordinarily well. So I think with the right sort of names, the right companies coming to the market, there's very good opportunities for investors who can be very patient and selective.
Now, what about corporate bonds? Because across the board there has been some more interest in corporate bonds, and we've seen some recent issues as well.
Right. I mean, for example, this week we saw a very interesting high yield issue from Heidelberger Cement. It came at a very whopping discount to their existing bonds in the market, with a yield of 9.65%. In many ways, it looked too generous. You had to question a little bit about why was this discount coming in such a huge way, and why were they coming to the market at the time. So I have to admit, we were quite cautious about it. But at the same time, in the aftermath of the deal, it was quite a small deal, 300 million euros. It performed extremely well, and the banks involved in bringing the deal did a very good job. Investor demand was like on a 10-to-1 type ratio, purportedly in the end. So you can see that companies can come to the market and raise funds, but some of the prices that they have to pay for their working capital is extremely high, and you have to wonder, is it a benefit for the market for when good companies like this have to actually pay such a substantial amount? It maybe is a signal that some of their the future of some of their operating activities could be under pressure.
If we look to the US and what's been going on there, and a lot of day-to-day reaction to the economic data that's come out there, but very often they tell us that they're concerned about what's happening in Europe. How much is Europe influencing the US, and how much are their problems homemade? Yeah,
it's really quite interesting. You speak to people who are based in the US, and the first thing they want to talk about is how Europe is destroying the domestic US market in terms of sentiment, across asset classes, and the rest of it. And in fact, I would think that there's too little focus from the perspective of what's really happening in the US economy, particularly on the political side of the fence, the ability of the U.S. to provide some leadership in terms of their fiscal situation. So here in Europe, perhaps in London, you hear people having slightly more, perhaps looking at the U.S. and the European situation. And in fact, the way that the U.S. has resolved the deficit issue in terms of funding government activities, but the European saga just continues to go on, and it's created an ongoing problem that, in fact, we see because it's become almost entirely political. The market's having a really hard time grappling with something that's become so entirely political.
And the volatility, would you imagine, will continue while this problem continues?
Absolutely. I mean, the volatility, what is it really? It really is thinner markets, volume that's concentrated on extreme ranges of buying and selling, and people being forced out of positions that perhaps ordinarily they would be able to live to fight another day, but ultimately the market can be more irrational and force people to do things that under normal circumstances they wouldn't have to do.
Norval Loftus from Allegra Asset Management. Thank you so much for joining us today and sharing your opinions.
Thank you.